This presentation is merely a brief overview of the topics covered in the chapter and should not be considered a substitute for reading the chapter. This chapter covers accounting basics, financial statements, and personal finance software. In cash accounting, a transaction is recorded when an item is paid for or when cash is received. Accrual accounting defines earning as an economic event signified by an exchange of goods rather than by an exchange of cash. Cash accounting is best for personal finance, while accrual accounting is best for business finance. There are three primary financial statements: the income statement, the statement of cash flows, and the balance sheet. Let's take a closer look at each one. The income statement summarizes incomes and expenses for a period of time, perhaps a month, a quarter, or a year. If income is greater than expenses, there is a surplus, and that surplus can be used to save or to spend more. If income is less than expenses, then there's a deficit that must be addressed. Here is a detailed income statement that shows our specific income and expenses. We start with gross wages, deduct income taxes to determine disposable income, and then deduct expenses, including interest expenses, to find our net income. A more basic look at what the income statement is telling us is presented here. We start with our disposable income and deduct all expenses. This leaves us with a net income of $7,250. This means we have a $7,250 surplus. The cash flow statement shows how much cash came in and where it came from, and how much cash went out and where it went over a period of time. The cash flow statement is important because it can show how well you do at creating liquidity, as well as your net income. Liquidity is nearness to cash, and liquidity has value. An excess of liquidity can be sold or lent, creating additional income. A lack of liquidity must be addressed by buying it or borrowing, creating additional expense. In business or in personal finance, a critical piece in assessing the current situation is the balance sheet. Often referred to as the statement of financial condition, the balance sheet is a snapshot of what you have and what you owe at a given point in time. In personal finance, assets are also things that can be sold to create liquidity. Liquidity is needed to satisfy or repay debts. Because your assets are what you use to satisfy your debts when they become due, the asset's value should be greater than the value of your debts. That is, you should have more to work with to meet your obligations than you owe. The difference between what you have and what you owe is your net worth. Literally, net worth is the share that you own of everything that you have. It is the value of what you have less what you owe to others. Whatever asset value is left over after you meet your debt obligations is your own net worth. It is the value of what you have that you can claim free and clear. Here the balance sheet shows a negative net worth of $52,720. That isn't quite as bad as it seems. When we start out on our own in our adult lives, it isn't uncommon to have a large negative net worth. Over time, we expect that to change. Here, the negative net worth is primarily due to the student loan. If we assume that a college graduate earns $1 million more over his or her lifetime because of the college degree, we can see that over time we will be able to change the negative net worth to a positive. Personal financial software will not improve your financial situation, but it can improve the organization of your financial data monthly and yearly, allowing you a much clearer view and almost certainly a much better understanding of your situation. Personal financial software is usually quite reasonably priced, with many programs selling for less than $50 and most for less than $100. Buying the software usually costs less than buying an hour of accounting expertise from an accountant or financial planner. While software cannot replace financial planning professionals who provide valuable judgment, it can allow you to hire them only for their judgment and not have to pay them to collect, classify, sort, and report your financial data. If you are interested in personal financial software and want to try a free product, you may want to check out Mint at mint.com. It doesn't have every feature of some of the other big name products, but it is terrific at organizing your finances and putting your data all in one place. That concludes this presentation. I hope you enjoy reading the chapter.